Is Phantom ready for new all-time highs? In today's video, I will be providing you guys with a beautiful potential long setup. What we see over here when we look at the Phantom chart is a beautiful range with range pivot number 1 over here, range pivot number 2 over here, range pivot number 3 and number 4 over here. Guys, we know in order to get a valid high probability range to trade, you always need at least 3 pivots, either 2 pivots at the top and 1 pivot at the bottom, or 2 pivots at the bottom and 1 pivot at the top. Now the area where you have 2 pivots, those 2 pivots need to touch the exact same price or almost the exact same price, alright? So they cannot be too far away from each other. So over here, beautifully for the range low, the pivots touching the exact same price, and for the range high, as you can see, the price touching almost the exact same price to get us a high probability range. Now what we can see is that we are looking at a potential high time frame deviation of the range low, and that the price is potentially trying to reclaim that range low level over here. Now we know that after a deviation of the range low, you should seek for liquidity around the mid-range, and you should seek for liquidity around the range high as long as they are both unmitigated. We have the drawn liquidity, guys. We have equal highs resting around the range high, providing us with a beautiful high time frame draw on liquidity, and we have this buy side liquidity resting over here that exactly aligns with the mid-range. So we are looking at a deviation of the range low, and we have a draw liquidity towards the mid-range and towards the range high over here, providing us with our first trigger to look for a potential long. Now the second trigger that you need is based on market structure, and when we look at this market structure over here, guys, what we can see, we form a high, a higher low, lower high, and we form a lower low, lower high. So we are in a downtrend. Once again, lower low, lower high, lower low. But after this low over here that I just marked out, guys, we can see that the price has broken above this significant high over here. Now why is this a significant high? Because this high over here brings us to a fresh low compared to this low that brought us to that high. So because that high brings us to a new low over here, it becomes a significant high to break, and therefore this is a valid break of structure that we are looking at over here on the Phantom price. So also the trend is with us over here. Now what we see over here when we analyze a local time frame is that we, besides Forex and commodity trading, Prime XPT has now also introduced crypto futures trading. So you can now also trade Bitcoin, Ethereum and the numerous amounts of altcoins, next to the fact that I think that Prime XPT to trade Forex and commodities with your own funds instead of trading at prop firms like Private Funded, I think Prime XPT is the best place to do so. Make sure to sign up with the link down below in the description to receive a 7% deposit bonus. See a beautiful liquidity sweep of sell-side liquidity resulting into this push towards the upside, right? So that is a beautiful potential invalidation for a bullish thesis, because what we can see over here is that we were having this local bullish uptrend over here, right? The local bullish uptrend over here led to this flush to the downside, took out sell-side liquidity. Once again, local uptrend, as we can see. Once again, this local uptrend leads to this flush to the downside, which means that the high that we were breaking over here on a lower time frame was also a significant high to break. Why was this a significant high to break? Because the high that we broke through over here brought us to a fresh low over here compared to this low that brought us to that high. So it was a significant high to break. So the local time frame shifted to the upside over here, which makes this our invalidation for a bullish thesis instead of this low over here, which means that we are getting a potential tighter invalidation, which might provide us with a beautiful RR setup. Now what we can see over here, we shift the structure on the 4-hourly time frame, we shift the structure on the 1-hourly time frame. We are potentially trying to reclaim the mid-range. Now you guys know that usually I don't really like these perfect retests of that range low. Often what these perfect retests are designed to do, especially if you see a bounce after that perfect retest, providing us with a potential fake break of structure like we are seeing over here, because the true break of structure was resting obviously over here, but retail thinks that this is a valid break of structure and that this is a perfect retest of that range low area, is that people start opening up invalid long positions over here with their stop loss over here, or invalid long positions on the pullback. All in all, it's important to realize that their liquidity, guys, is resting over here. So I am currently already building a swing long position from off this wick over here. So I am already in a small long position, but in order for me to add to the position, I would like for the price to take out this sell side liquidity over here. If we take out that sell side liquidity, I become interested in adding to my swing long inside of this entire area over here. So this entire area can be used to potentially add to my swing long position. I have a very clear invalidation beneath this low over here. But if we are going to sweep the sell side liquidity, then once again reclaim the range low in confluence with a break of structure to the upside over here. What I will then do, because if we look at my current position, it looks something like this. But if we are going to sweep this sell side liquidity, like I said over here, followed by a break of structure over here, then I get myself a trigger to look for another long position, because structure is allowing me to, because liquidity is allowing me to, and because the range is allowing me to as well, because we are creating a smaller second deviation in that case over here. What I will then do is tighten the stop loss of the current long position to this local low. What I will then do is add another long position over here with the same invalidation, and I can do this because the current risk is 1% on this trade, as always. But when I tighten my stop loss to the local low, it will become, for example, 0.1% or 0.2%, which means that with this extra long position, I can add another long position with 0.8% risk, for example, with the same stop loss, potentially massively compounding profits along the way up towards our first target and potentially towards our second target. So that's definitely a scenario to keep in mind as well, guys. If we are going to get a scenario like this, in which we do get this local bullish liquidity sweep, followed by this push up and the break of structure, I am going to add another long position targeting the mid-range and targeting the range high.